everyone. Welcome to Next Level Humanity podcast. I have a dear guest here, Bubba Hagood. Hello, welcome from Tenon Ventures. And we will be speaking about the inner journey behind innovation, investment, and making. The theme is crafting deep tech and deep trust. Welcome, Bubba. How are you?
I'm doing great. I've survived the snowstorm in Boston in the Northeast.
I heard.
Just got 20 inches outside. Just finished shoveling, so we're good to go now.
I think it's worse than New York, right?
A little worse in New York, yeah. Not they're all pretty bad. But my daughter lives in Nashville, and there are so many trees from the ice down on the ground. It's crazy. So I'm glad I'm not there. We know how to deal with the snow up here.
Yeah, I mean,
but Nevşah, thanks so much for having me today.
Would be stay inside.
Yes, best advice for sure.
Best advice, yeah. Your path spans entrepreneurial success, then tech strategy, and now investing. Before all the titles and exits, what inner drive first pushed you toward creating value through technology?
Well, I would go back even before tech investing. I've been super comfortable with math and science all the way through school and got into MIT and excelled at MIT and then joined the faculty there. So my path has always been wrapped around kind of science, technology, and figuring out problems and engineering things. Super comfortable with technology and investigating the unknown with technology and then joining companies and doing that, and then eventually becoming a venture capitalist and, working with companies to solve unknown problems and stuff like that is a very, very comfortable transition. So it's really all from my training, from my experience in science and technology.
And you love deep tech.
I do. I love deep tech. I love that. It's like finding Easter eggs. It's figuring out how to solve problems. There's a love for investigation and exploring that I love, and a love for building. So it's not just science; it's actually engineering.
And deep tech generally requires a lot of patience and also belief in the long-term game. And what kind of experiences shaped you, especially in your investment thesis?
Cool. Well, the investment thesis on deep tech was informed basically from my time as faculty at MIT and spinning off technologies. So I knew that was where I wanted to work and where I thought I could make the most impact, and where there was we'll I'm sure address later, but a big gap in the ecosystem in transitioning hard-won technologies that have been developed in the laboratory and getting them out and to create value in the real world. A lot of times they just die on the vine. They create some papers, but never produce any kind of real value. So I kind of gravitated that interesting aspect of developing technology, which is developing useful technology, right? Or something that will have real impact in the world, not just on your peers' future papers. Right? So.
Yeah, and I hear like there was a kind of like a point where you decided with a clear calling. Was there?
Yeah. So really two moments like that in my career as I span through. So as I said, it started academic, faculty, building up a big laboratory, spinning out technologies. I had taken some time, my sabbatical. After I got tenure at MIT, I went on sabbatical and I joined a bunch of my postdocs and students who were trying to commercialize some technologies. I had asked for 2 years of leave, and MIT granted it to me, but they wanted me back so I could teach. Sorry, there's a little background noise from my pipes trying to keep me warm. So they wanted me back early. And we had found this was right at the moment when the telecom bubble was popping, 2001, and we had decided to become a telecom company, and we had a venture capital company that would give us money if I stayed. And MIT said, no, you can't stay. You have to come back early from your sabbatical because we need somebody to teach structural dynamics. Right? So it didn't make sense to me. And and I couldn't really put people, 35 people in the company out of a job by denying them funding. So then my career path changed, and for loyalty reasons, and started building companies and doing, focusing my energies toward that as opposed to kind of academic research. So that what got me on the operator side, building companies, taking ideas, extrapolating them, bringing them to the marketplace, creating value there. Then there was another major moment after I finished my last company, which I ended up selling. It was a software company that I sold to a private equity firm, Advent International. And I realized I didn't want to kind of be on the operator side anymore. I really wanted to be more, expand my purview, get back more to kind of deep technology, helping companies, bringing things out of the lab, kind of that element of the process that I thought I could bring more to, and I could have more leverage in creating value. So then basically switched to becoming a venture capitalist and helping a variety of companies as opposed to focusing all my energies on a single company.
And I remember us talking about it. We both like being around founders and innovative ideas, and it's never boring. And I think that's
It's
also
never boring. Absolutely. I mean,
never
that's
boring.
it's very, like when I was faculty at MIT, you have amazing individuals walk across your desk and want to work with you and do various investigations in a wide ranging set of areas. It's never boring, and there's a lot going on. MIT is like a beehive, so everybody gets focused there. But the venture capitalism is a lot like that. You have amazing entrepreneurs who are very talented, very capable, and then you get to pick who you're going to be working with, and which ones, in evaluating and understanding what they're doing on a very deep level. So it's an incredibly rewarding job. It's because especially when they are incredibly capable, but they realize that they have gaps in their experience set or their understanding about how to take, what was an idea to a company to kind of the next level.
And there is also in the venture capital world, there is also the factor of risk. So what initially shaped your relationship with risk? Because I think that's also the part of the excitement. And how has the relationship evolved over the?
Yeah, that's interesting. I actually had this conversation with my wife a little while ago. She goes, from her perspective, I'm very risk sensitive, but not risk sensitive. I'm very risk tolerant, right? And I do things that, from her sense, appear super risky. And I was trying to kind of put it in context and understand why, it doesn't appear to me to be that way.
Yeah, you don't see it as a big risk.
I don't see it as a huge risk, I guess. So, all the way through my career, I've been essentially facing kind of the unknown answer, how to get from point A to point B, where you don't even know what point B is. You don't know how to get there. You have to craft your own bridge over that chasm. So that's a recurring theme. Even when you're investigating as a researcher at MIT, you don't know what the answer of your research is going to be. You just know the process, and you go execute in the process and get you to the final answer. So that's kind of the beginning, kind of trust in the process, trust in your capability of eventually getting there, and knowing that there's a goal that's worth achieving. And in engineering, you also extrapolate a lot. You take a little bit of information and you figure, okay, well, I have these assumptions. What does that mean? So you're always living in the future. You're always living in extrapolation of what you think could be created. So I'm very comfortable living in that kind of world where people are saying, well, this means this. If I have this new enzyme, I'll be able to create this new reaction, and we'll be able to make ammonia at 1/5 the energy of the current Bosch process, right? Or I'm used to that kind of extrapolation and using kind of your intellect to kind of put yourself in that future position. So when you're there, you've mitigated those risks. You've thought through, is this feasible? Is this real? So you're always kind of calculating ahead to mitigate those risks. Sometimes this doesn't make any sense. Like, no, they're not going to be able to do that. right? There's too many things going on, and you step back away from it. But sometimes you join them on the journey, and it makes sense to you, and then you all are teamed together and adjust to um, whatever problems the world throws at the company, right? And there's lots
Yeah.
of them that they don't plan on, but you know.
And I think once we spend enough time in an environment, in a space where you spend a lot of time already in deep tech and tech, you kind of like have what people call risky might not be risky for you because you know more and you've been
Yeah,
in that
it's all very
like all
calculated.
this depth of wisdom and knowledge, and maybe that's why it doesn't feel risky for you because you kind of like understand the formula.
If you've seen a company scale something from an idea to something that has impact in the marketplace, similar to this other company, then you don't think the company's risky because you see them. There is definitely a path that they can travel, and there's definitely reason to believe that this new approach is going to yield similar sorts of results. So yeah, for familiarity with the marketplace, familiarity with the process, lowers the perception of risk. Or at least the ones you're aware of.
Yeah, and you evaluate companies, well before the world fully understands anything about their potential, and that's also very interesting. And what are the kind of like a few evidences that you see that you're like, okay, this company has a potential, they are going to be able to make it? Are there any kind of like
It's kind of
evidence?
two sides to that answer, and they're interrelated. One is the individual you're talking with, who's representing the company. We tend to invest in companies where there's a technical founder that's come through, or it's really technology focused to start, and they might be transitioning to more market focused or more product focused. But what is the integrity of the person you're talking with across the table? Do they have the capacity to exaggerate or to only focus on the good things, or are they level-headed? Have they thought deeply, and do they have a lot of horsepower? Right? Do you think there's a reasonable belief that they can actually solve the problem or have solved the problem? Right? So 100%, it's not 100%, but it's a large fraction is the individual and the individuals in the company. What do they have going for them? The other is your own kind of perception of the technology and what it can do, and is it real, right? I like to think that I can understand the technology at the level of some of these founders, or maybe not as deeply, but I can get the gist really pretty quickly. So that gives me more time to kind of focus on the real problems, which might be, does the market really want this, right? As opposed to, can it actually do this, right? Or how deeply have they explored what the market really wants, or the additional requirements that the market puts on the opportunity that they haven't thought of. Like, oh, it's got to be tiny, or it has to be below $100. I remember I built a display company one time, and it was right when the world was turning to smartphones, and people were going from a couple lines of text on their phone to one day having a QVGA display and having colorful characters. Why would anybody want an image on their phone, right? It's ridiculous, but I remember, we initially went out to talk to Motorola, and they panned our idea because we were going to do reflected. It was going to be super low power because power is an issue on a mobile phone, but as you can use ambient light. And they said, no, there's absolutely no way. We'll never deploy a reflective display. We have to sell our phones in a darkened, or a well lit, storefront, right? We have to convince somebody they want to buy it in a well-lit storefront, right? It has to be bright and beautiful, right? And the reflective display can't be nice indoors. There's not enough light, right? So had to throw it all out and turn it all around, and only by talking to the customers did we actually get the real requirements that would make that eventually a success, right? So a lot of people forget that they really have to understand the market at the level of their customers and become experts in that.
Yeah, it's kind of like you need to be on the street, you know.
Yeah, I mean, we tell our CEOs that you have to
not
become an
literally, but
expert in
it's
the
like,
application at the level of your customers. They have to look to you for answers, right? You know, in the beginning, they're the experts. By the time you're going to be selling them product, you've got to be the expert, right? Right. So, and it's like, so a lot of them take that challenge on and become, it's a new learning opportunity. But a lot of them, it's outside of their skill sets. They don't know. It's not quantum chromodynamics or they're doing that. It's not the deep electronics they're used to solving. It's a different sort of set of problems, a different set of understanding. So,
and a learning experience. That's brilliant.
yeah. And so are they capable of expanding and generalizing the kind of problem solving they've been doing just to a new set of problems?
And when building a company versus backing one, how does the mindset shift, if at all, in terms of responsibility, presence, also vision?
I love that question, right? um, so when you're building a company yourself, it's all on you. A lot of it's on you, especially if you're the CEO of that company or in the finance team. There's huge areas that everything's relying on your execution. So I think it's a lot more pressure. I'm sensitive to that. There's a lot more things going on. There's a lot more. The environment seems a lot more constrained. There's so many things you have to put your time and effort and focus and attention on. So that is, and a lot of times you're spending half your time on things you don't really enjoy doing, even, right? You're hiring. You talk to our young CEOs and say, look, you got to spend about half your time finding that perfect team, finding those individuals you want to work with. They're not easy to find, right? And you might spend a lot of your time, building your team up. I got a call tomorrow with one of my CEOs, youngish guy who's trying to figure out, like, how do I build my team and how do I maintain culture? But it's all on him. It's not something he loves doing. But
Isn't it similar to? I find it very similar to parenting and grandparenting.
Yeah, well, on the other side, it's very there's a good analogy between parenting and grandparenting.
Yeah, I think
Grandparenting,
it's
you only
very
have to
similar. I mean, I say it often.
well, I'm not a grandparent yet, so I'm still waiting that
Yeah, but
magic
it's
moment.
like when you're a parent, you have all the responsibility and you do things you don't want to do because it's your responsibility.
Yeah.
But then when you're a grandparent,
Yeah. So
you
as an
just,
investor, you've got to be sensitive to the fact that CEO has so many things pulling on them and so many problems besides the one you think is the most important right now, right? So it is much more, um, you know, it's much more of laying the groundwork and laying, like, what do you need to accomplish? How can I help you? How can I help you focus on the more important parts in the sea of kind of noise that you're living in, right? Or what actually has to happen. So we do a lot of work kind of helping them formulate plans and say, listen, to go to that next stage of financing, you need to have a couple of customers at this point of development. You've got to have this much progress. Well, that doesn't just happen. How does that happen? Helping them formulate a plan of action. So it's helping them reason through those things and what's important, what isn't important. And a lot of things are just, they got to do that, got that. But sometimes they need a judgment call. Where should they be putting their time and focus? And experience informs judgment, right? So we can offer that up to many of our CEOs. So it's actually I like that analogy. It's very similar to watching someone else's kid versus
yes, yes,
versus
yeah.
taking care of their own, for sure.
And it's also in a way, I also see it as founders sometimes might lose their objectivity because they are subjective, about what they're doing. And I think investors, VCs, especially like yourself, who have built their own companies and grown it and
Yeah, that's
exited,
what they're saying. Like,
you kind of like bring that overall, like a more holistic approach and also an objective view where they can be very much
what ends up being really important at the end, right? Like, I remember when I was a young CEO at a startup, this place startup, Pixtronics, I had. we had a very, very accomplished business executive, Jerry Fine. He was the head of Corning Photonics, so making all that fiber, huge thing. I brought him to a conference in Korea, made him fly economy the whole way back and forth from U.S. to Korea. And he said the first time in 15 years he had flown commercial. Right? He'd been used to flying Corning's jets around. But after our first board meeting, I was like hitting everything. I was like trying to knock it out of the park. He says, "Oh, that's very well and good. I'm glad you did that. But what is your cost of manufacturing? How do you figure that out?" Right? And 7 years later, it all boiled down to what the cost of manufacture was. After we proved out all the other things, that was the dominant question. So keeping us focused on that was one of the things that helped the customer company succeed. So you get a lot of that, helping them focus, help them understand what's important, what isn't. Very similar to grandparents, they've raised a kid, they know it's not going to get a horrible disease by eating a hot dog, right? Or something, you're not stressed out about everything.
Giving the wisdom.
Whereas a new parent is stressed out about everything, right? So they don't know, I remember when I had my first child, they didn't eat any hot dogs for the first 2 years. We had tofu dogs. I fed them and stuff like that.
No Coke, no sugar.
No, nothing like that. The third kid, we were having like chicken nuggets and macaroni and cheese, and we weren't worrying anymore.
Yeah, I know.
Same thing. You can focus on the important things and try to help them there.
And as Tenon Ventures, you consciously bring operator experience to early stage investments. What gap are you trying to fill personally and also structurally in the VC ecosystem?
Yeah. So there's this moment of transition when things first leave the laboratory in the early stage. So I've been mentoring in deep tech for 15, 20 years now. It's been a long time seeing companies, individuals trying to take technical ideas and commercialize them, stuff like that. And while there was some money at that early stage, that first $250,000, $500,000 check, there wasn't like guidance there, right? And a lot of times, right in that moment when those companies get formed and then start setting up and trying to find their first customers and stuff like that, you get a lot of people picking the wrong business model or the wrong application, and they end up having to pivot the company after a year and a half. There was a lot of wasted time and effort because they weren't getting the proper guidance in that early stage. And having mentored at MIT and seeing the kind of guidance they were giving, and I really thought there was an opportunity to kind of, from my experience and Tony's experience, taking technologies and finding good, proper market fit and a good home in the ecosystems for those technologies, helping companies navigate that, cool technology that actually has meaning out there, and what meaning out there actually, what it looks like. Helping these individuals do that translation was, I think, where I had skills, where Tony had skills, and where we thought we could apply the best, and where there was a huge hole in the ecosystem. I mean, there's companies like The Engine, a venture capital company by MIT. They've got $500 million. They can write $20 million checks for technologies that take 20 years to develop. But that's only like 1% of a really good deep tech technologies out there, right? They're not all, 20 years to develop, or new materials, or fundamentally, some of them are a new catalyst that has to be explored, or a new way of printing electronics, or a new robotics technique that allows people to work with robots. I mean, a lot of them are, not 20-year time scales like fusion energy, but might be a new way of modeling fusion so that you can get better control, right? So there's lots of pieces of the puzzle that needed to be developed that weren't being addressed.
Yeah, and I think that's a very good gap in deep tech.
And there's a lot of people like putting small amounts of money in place, but they have no operational expertise. So it's really just money. And those companies don't need money, but they need, well, they do. They don't just need money. They need guidance to kind of figure out where the best place and time and the best use of their time for creating value.
What does, because you're very impactful as well, what does real impact look like when a company you back scales beyond its original vision and, grows big and makes it happen?
Yeah, I mean, most of the time it means they're acquired by another company and they're working with a lot more resources, right? But the way it feels is sort of I like to use the surfing analogy. Like you'll be out there and there's waves coming. You'll struggle. You'll work really hard building your company, working really hard to get your board out behind the waves, which is the hardest part of the whole thing. And then figuring out where you have to be so you can catch one of these waves, right? And so success of the company is when you actually find a wave and it starts carrying you, right? And then suddenly the set of skills that you needed to bring this company home is completely different than the skills that got you out behind the waves and had catch the wave. It's now a balance and grace and moving with the opportunity as opposed to fighting and making it, improving yourself and stuff. It's a whole different set of beasts. So it's a transition, and suddenly you've got energy that you can utilize in helping you with that transition. So you start rolling downhill. Things start pulling you as opposed to you just constantly pushing. That's what I tell my CEOs when they ask me what it's like. That's what happens. Yeah, yeah. It's very very fulfilling when you start getting some pull. There's some excited people who want to see this being deployed and align with your vision of how it could happen. Like, oh wow, people actually care about this. Yeah, it's not just me anymore.
It's very fulfilling. Yeah, very
Yeah.
fulfilling. If capitalism were asked to serve humanity at its best, what role should deep tech play in the transformation? What's your view on
Well, you've asked somebody who's passionate about deep tech, right? So in my worldview, when I look back, all the major changes in society have happened because of technology innovations, right? Like agriculture, suddenly you can now live in cities, right? Water flow and aqueducts, you can actually live in bigger cities, or plumbing and sewer, printing press, the World Wide Web, it's all modes of communication. Now it's, transitioning to, AI and how it can help people and augment them and to be more productive and do great things. So there's always in my mind, a positive, can be positive aspects of technical innovation, and almost everything that you've seen have really been resulting. I mean, you could explain democracy as a result of technical innovation. The city-states grew up because technology was enough to support larger groups of populations at one location. So there is a technocentric point of view, which says a lot of things happen from developments in technology. And if you look at where we are right now, there's we're at sort of tipping points that they've been creeping up on us, but suddenly now, the cost to compute is 3-4 orders of magnitude than it was 20 years ago, 10 years ago, right? It's just so much easier to do complicated compute operations. And then you see the logical output of that is self-driving cars or AI, where you can have the scale of compute that you can start doing some very interesting compute processes. And that didn't happen because I'm gonna come up with a GPU. It happened to me over 10-20 years where people made these things more efficient. The node size scaled down, you get more transistors, and all of a sudden you can put incredible amounts of power on chips and you can connect them and make some amazing things happen. So, I mean, I have companies, that we have that, they can do guidance based on vision, looking around them like you would, saying, okay, that tree is over there, that mountain's over there, that's where I am. You couldn't do that without a GPU processor. So fundamental technology developments have been marching along and enable some amazing things. And those are now coming to fruition in a lot of different ways. So the cost of space. I mean, I grew up where it was $50,000 to get a pound of mass into orbit, and now it's coming down to hundreds, thousands, maybe low thousands. Things are completely different. I have one company that is it's cheaper to put a payload up in space and test it up there and do your experiment in space than to try to replicate those conditions down on Earth. Right? I mean, suddenly the whole the economics just turns around. You know, if it's this cheap to put something in orbit, then you can put 20,000 satellites, and suddenly you've got radio towers in space, and you can talk to these radio towers with your cell phone. And suddenly, you know, the whole infrastructure for way humans communicate changes dramatically because somebody put some time into 3D printing an engine and made it reusable, right? You know, so you know, these things all interact and cascade. So I'm a firm believer that investing in that area in deep tech enables kind of the kind of future we're looking for, you know, where you have instant communications, you have you know, more resources and more abundance to go around.
And it also feels like, I mean, deep tech investments usually, for me, it feels like also like kind of like putting a small mark on the future of the world and humans. It's kind of like you put a small mark.
It's definitely a faith. I mean, like all technologies can be used in different ways, right? But you know, there's the opportunity at least to do something good with it, and the you know, but it doesn't all have to be like long range, you know, charity. It's not charity, right? If you look at like deep tech investments as a venture class, right? It's doing as well as any of the other sectors, even excluding AI. If you look at like capital efficiency, how much money it takes. Well, deep tech takes more money up front to develop the technology, but once you have the technology, it doesn't take as much money to spread it out and to make it valuable. It's more of a low cost business development process, not a market creation process. So, you know, software companies, easy to bake, but hard to get a lot of people to adopt, right? So it turns out it's no more capital efficient than to exit than software companies, even though it's hardware and hard, right? So if you look at like you know, the percentage of companies that actually go within you know, 5-year time to you know, real value, an exit or a public market, it's comparable to software companies. You know, software companies have to get really large, whereas hardware companies tend to exit a smaller scale by acquisition by a strategic company as opposed to having to go public, right? So so there's a lot of
journeys.
Yeah, it's a different type of journey, but the financial performance numbers are nothing that to be, they're similar to investing in software companies.
Yeah.
You know, people don't really realize that a lot. They think deep tech is like, oh, it's tough tech, it's hard, it's risky. But you know, the outcome, if you took any first money into a company and you did a software company, a bio company, and a deep tech company, you're twice as likely to have the deep tech company return and exit at a great valuation of it than the other two companies, right? They tend to grow up and exit properly. It's still a, you know, 5%, right? It's still a small percentage of all the companies, but it's way more likely than the other companies. So not a bad area to work, but also you get the option to have some real impact in you know, the economics of some value chain or even in people's lives.
You have a lot of advantages, I think, because you can help the founders in operation as well.
That's the goal. The goal is like, you know, we can help them avoid the kind of mistakes that we have made many times. The bad hires or the pivots you have to make and lose 2 years of your company life and a couple of rounds of financing to do that. Best to get it right.
And some investors talk about timing the market, but you talk about timing the human journey. So I think that's what you mean, right? With deep tech, it's all about the human journey.
Well, yeah, I mean, a timing market doesn't work with early stage tech investing. You know, because you'll put money in now and it'll pop out 5 years from now, and nobody can predict what the world's going to be like 5 years from now, and any kind of like what the market's going to be like for sure. Yeah. But yeah, I mean, there's two aspects of that. One is, you know, you want to find the right type of founder, you know, who's on the right place, and they're, you know, they're ready to make a company, they're ready to make an impact, and they're ready to learn. So there's finding them and following them in their journey as they create value. The other is just the strategy. Does investment in this sector, in this type of startup, make sense from what's going on in the world and what they can actually do and what's being valued and what the companies look like and what the the strategic landscape as far as what companies need what to succeed as they grow up. So there's two pieces of that: the person and the human that's going through, and then what society as a whole. But timing the market, yeah, you can't really do timing.
And let's come to some personal questions. We have a couple more minutes. So when uncertainty feels loud, and when things don't go the way you thought they would, what inner truth keeps you anchored and on track?
Good question. Their truth. I mean, so I tend to try. So in many aspects, I like being alone, which is weird. That's there's
I can totally connect with that. So that's not weird for me. I love just being
well,
alone.
I'm in a people business, right? So it's networking, it is talking to people, stuff like that. But when there's a lot of chaos and I tend to retreat inside myself, take a walk with my dog in nature, spend some time up in the cabin and kind of think through, the various options as dispassionately as I can, and also figure out what resonates with what I'm looking for and stuff. So I tend to, I guess, fall back on myself and nature and kind of clarity of just being one piece of a much greater sort of natural world. I really enjoy the walks and the hikes and sitting out by the water and just kind of emptying myself of the problems and seeing what actually sticks.
Yeah, I mean, I think spending time by ourselves and finding ways to center ourselves, uh, especially when the world goes insane, like coming back to our sanity, that's a superpower.
And you get a lot of that right now. So.
Not many people have that, but if you don't have that, it's just a crazy race, and I think we need it, and I strongly advise it to, not only investors, also to founders as well. So spending some time alone, meditating, just being in
Yes,
nature.
meditation is being in nature. I find nature very, it's just so beautiful. The trees, the way, just looking at the way a tree figures out how to grow in a certain environment, and like over that rock and around that, and the organic nature growth. I love that kind of that aspect of things. Things just adapting to the world around them and growing around and still being successful, but then accommodating that boulder or that poor soil or whatever.
Yeah, balancing ourselves.
Yeah. Nature does it very, very nicely.
It does.
And people tend to fight against that when they shouldn't be fighting, right?
Yeah. And over the years, especially now, what would you say, what are you currently unlearning about outcomes, ambition, identity, business, startups?
Yeah, I mean, so, individual success has been kind of the hallmark. I've been pushing, with MIT, got tenured, reached kind of pinnacle success at MIT, then moving on and building up companies, trying to get individual success in building the companies, have success there, financial success. I have been generalizing that. It's more the journey that you've had, it's the, helping other people achieve success is, and loving that. Sometimes I have been very goal oriented, and I'm trying to make myself more process oriented and more in love with the process. And I find that helps me a lot now. It's like, okay, so, do what you love doing, right, and everything will follow from that, right? As opposed to it's got to do this, got to do that. It's got to put that unnecessary.
And I agree. It's kind of like sometimes it's kind of like sounds like cliche when people say it's the journey, but it
Yeah, it
is
does sound like a shame, but
who we
it
become.
dovetails in the fact that when you're a venture investor, you're vicarious. You're helping other
Yeah,
people. So there are some derivative, performance metrics and stuff like that. But fundamentally, if you help that individual, somebody else, not yourself, succeed, it's a mentoring process. It's
yeah,
it's it's coaching them. It's all process oriented. It's not kind of end goal oriented. I mean, it
yeah, and
is.
who we become in that, like both the founder and the investor, and with that personal
Yeah, and you
relationship.
make a decision based on, a lot of it's a person. It's not necessarily goal or it's does this person have capacity? Do they have potential, right? So a lot of it isn't the goal. A lot of it is who do I want to travel this journey around? And I remember when I was putting Tenon together, um, I have an old time partner, Tony Zona. So I brought him in as a CEO for one of my companies when I was building venture companies. And I was holding on to that company so tight. I was a leader, I was the founder, and it had to succeed. And my entire financial existence was wrapped around this company. And I was holding it very tight. And I was going into people's offices and solving all their problems for them. And the company was succeeding, and my employee base was just miserable, right? Because I would go into this 40-year-old or 40-year analog electronics designer, and I'd fix a circuit design for him, and it's like just taking the air out of the room for everybody just by just going in and just solving problems for them, and just manhandling things. Um, so I brought Tony in. He had basically built up and sold a company called Quantum Bridge Communications, nothing to do with quantum, but everybody knows it as Verizon Vios. It's the broadband fiber to the home technology that Verizon uses. It's the number one broadband technology. He had built up, so he got that relationship with Verizon and sold that company, and brought him in because even though the telecom bubble bar burst, he still got a good sell. He was scrappy. My one requirement for a CEO to work with me was that he was scrappy, or she was scrappy. But the so he walks into this mess that I created, right? And just invested in me and training me and learning, helping me, essentially navigate, how to manage people and create goals and create an environment where everybody can be successful and win. Um, so I learned a ton from that process. And he and I worked together really closely to kind of get the company with a very, very successful exit to Qualcomm. And so I realized that, he has skills that very different, he's a successful tech entrepreneur, high level. Mine are much more kind of technically focused. His is a much more business strategy, managing people, different sort of set of skills. So he and I have been working together on my last company. And then we went to, I wanted to start this venture fund, and he didn't want to get him that involved and stuff like that. And I worked on him for a year because I knew that I had to have somebody with a very different perspective than me, helping me make decisions, and working together. So it was like, build your team, right? Build the people you want to enjoy, and work and kind of, enjoy the process with, and that investment in the team is like the number one thing that's going to pay off. So what I've been learning is, just bring good people around you and let them solve the problem, right? Or you don't have to solve everything yourself. You can go in the process. You can trust your team, and those are very similar sort of themes. Give them good goals, let them achieve, trust in the process of creating, aligned incentives.
But it was a wonderful chat, wonderful conversation. I'm certain that
No,
anybody
great
watching,
questions. I appreciate them. That was
yeah,
you
they
know,
they enjoyed as much as I did, and I learned a lot. And now I have a clear view of deep tech and deep tech investments, and
well, you got
yeah,
a
in
view. I don't know
general.
about a clear view.
Yeah, thank you very much. And one final question. If you could leave one message for founders and investors navigating the deeply unpredictable early stages of creation, what would that be?
And interesting. So it's investors and companies, very different skill sets. In both, I think you have to be very careful and pick people you really want to work with. A lot of people think that their teammates are handed to them, right? I've got to pick this investor because they have money. But who you pick to go on the journey with you, the investor you decide, do they share your vision? Do they trust you, right? As opposed to just giving you money because of the possible outcome. Always work hard to pick those groups of people that are marching with you. And investment in the team, I think, is the number one investment either new investors in companies or companies themselves can make. So build the people capital.
Thank you.
Well, thank you. I appreciate the chance to talk for an hour.
Yeah, same. And thanks to everyone who's watching and listening. And reminder to subscribe to our YouTube channel and Spotify account. Thanks a lot again. And
All right.
I will see you in the next episode.
All right.
Bye for
Thank you
now.
so much. Bye-bye.